Today, we're getting into the nuts and bolts of stock picking by fundamental analysis. It's tricky to get it right, but we're breaking it all down in this video so you can get a flavour of all the main elements of how it works in practice.
Fundamental analysis looks in detail at all aspects of the company itself as a suitable investment, as opposed to technical analysis where all that really matters is the stock's current price. This video is part 2 of a 2-part mini-series looking at how to find and invest in stocks that can beat the market average.
Stock picking can be one of the riskiest ways to invest if approached incorrectly. So in this video, we're covering the minimum knowledge needed to start stock picking, the mistakes to avoid, the software to use, and easy wins to massively reduce your risk. Let's check it out.
Welcome to Unshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe. Keep it simple. Never invest in any idea you can't illustrate with a crayon. You can do all the fundamental analysis in the world, but still not understand what a company does. Oftentimes, the best stock picks are small companies whose business models are obvious and that you can just tell work.
Take a small business that sells perfume online. A common Joe can assess that business model against what he knows to be true about the world. Yes, people are shopping more online than they used to. Yes, perfume is an affordable luxury item that's sure to have a long-term demand and is surprisingly recession-proof.
A company that grows and burns biomass fuel for energy might be less obvious to understand. Are they reliant on government subsidies? Will expansion plans be held up by a complicated legal battle? Will biomass become either outlawed or uneconomical to produce in the next decade or so? Or will it be the fuel of the future? We don't know, and so it raises red flags.
Which stocks get our attention? As we covered in the first episode, we're looking mainly at small cap stocks with market caps up to around £1 billion, but preferably in the low hundreds of millions of pounds, found on the FTSE 250 and the FTSE small cap indices in the UK and the S&P small cap 600 index in the US.
We wouldn't look much below £50 million though, as these might be too risky. And we wouldn't be interested if the exchange market size was lower than the amount we wanted to trade, nor if the bid-offer spread was too high. 5% is probably the limit, but we would prefer much less than that. We covered these concepts last time, so be sure to check that out.
How stock picking would actually work in practice. You might research 20 companies over a week and buy just one. And as the weeks and months go by, you might have to cut your losses on several of these if they turn out to lose money, or sell if they pass your target price.
One school of thought is to cut your losses if the share price falls below 15% what you bought in at. Remember, these are different rules to how we approach ETF investing.
You'll be left with a small portfolio of really good stocks that grow by significant percentages. Maybe a 30% plus annual average return over a long period, compensating you for small losses on other stocks and providing you market-beating overall profits.
How dividends factor in. We're not picking stocks specifically to receive dividends from them, but it's nice if they do pay them. This is because a dividend is a signal of a company's financial health. If dividends are consistent or are rising, then that is a very good sign. However, if they have been cut or they are falling, then that is potentially a very bad sign.
What has gone wrong with this company's cash flow to mean it can no longer afford its dividend? This is where your research of the company might step in and answer your questions. Maybe the company is going through a growth spurt and is redirecting dividends into paying for growth opportunities, which is a pretty good reason not to pay a dividend. Some companies will never have paid a dividend. If that's because they've been growing and aiming for the stars like Amazon did, then fair enough. Remember, Amazon has never yet paid a dividend.
Fundamental analysis basics. Your research into a company would include: what does the company do and what sector is it in? Can it be illustrated with a crayon? What are its profits and are they going up? Is it making good sales and revenue?
What is the net debt? Is the outlook positive for this sector and this company? What's happening with its competitors?
Are there strong barriers to entry to stop others stealing its market? Any recent news, good or bad? When is the dividend paid and is it rising?
When is the next results statement due? Has the share price been moving up?
How to find the answers. Number 1, the company's latest financial report. These are found in the investor sections of company websites. Here's an example from a random FTSE small cap company's website. We have accounting training and still find these reports unreadable. A year-end financial report could be 400 pages long and 395 of those pages be complete waffle. Please, if you value your time on this earth, never read one of these reports cover to cover.
Numbers wise, we're interested in the pre-tax profits, how much debt and cash the company holds, and a glance to check its income is coming from actual sales instead of government subsidies or other nefarious means. We want the net debt, which is debt minus cash, not to be too high. Our research tells us that if the net debt is no more than 3 times the profits, then it's probably not going to cause the company problems.
And we want to read the executive summary at the start of the report to see if there are any obvious problems with the business highlighted that the directors are trying to sugarcoat with words like challenging or tough.
Google the dividend history. Dividendmax.com is a decent free place to look solely for dividends, but more comprehensive information can be found on Stockopedia for a fee. For dividends, both show the history as well as dividends that have been declared.
While you're Googling, do a quick search of a company's name to check for any recent news, looking for anything negative which might stop you from looking at the stock any further. And the same for its sector. And then we can do what most people start with and then stop at. Check how its share price has moved.
How to read the share price. If all the fundamentals that we've researched are good, then a declining share price in itself wouldn't be a turn-off if it can be explained. But what we usually want is a recent history of prices going up. We want to invest in companies that are currently growing and that we think will continue to grow further.
This is a different strategy to ETFs, where we quite like buying at the bottom of the market because they are massively diversified. In fact, if the market crashed again, we'd be piling everything into global ETFs while prices were low. If you try to buy individual stocks while prices are falling, there's a good chance that the stock you buy could go bust. This is called trying to catch a falling knife.
We're picking stocks for their fundamentals, and a climbing share price is a good sign of financial health. A falling share price on a small cap stock is as likely to signal that the company is dying as it is that price is at a bargain.
What a headache. You can imagine how much effort goes into picking stocks correctly and how much harder it would be than just buying big blue chip dividend companies or globally diversified ETFs. The main problem is the research and having to trawl through hundreds of companies' accounts and websites. That's where Stockopedia comes in.
Stockopedia is the site that we now use as a one-stop resource for finding and researching shares. We honestly don't know where else we'd go to find all the information required to trade effectively. If you have a decent sized investment pot or plan to have one in the future, then we think this service is worth signing up to.
Check it out on Trustpilot, and if you decide it's for you, we've arranged a deal with them that gets Money Unshackled viewers a 14-day free trial followed by 25% off their first year. A huge saving. The link to this is in the description below.
The difficulties and work involved in stock picking is why so few people manage to beat the market. But if you take the time to learn, we believe that the fundamental analysis method of stock picking holds the answer.
Over the coming weeks and months, we'll be digging further into stock picking when we're not filming Money Unshackled videos. And if we find any juicy opportunities, we'll be reporting back to you, so make sure you hit the subscribe button.
Level 2 and market timing. There's loads more to it than this. For super accuracy and control, dedicated traders use software called Level 2, which lets them see the entire order book, not just the best bid and offer price. But it's not necessary. If trading were like a knife fight, the basics of fundamental analysis are already giving you a sword big enough to win. Level 2 just lets you go full on samurai.
Avoid tipsters. If you read a hot tip by a journalist that a share's price is going up, you can be sure that millions of other people have read that same story.
They'll all be rushing in to buy, pushing the price up, so by the time that you buy, the opportunity to buy low has already long gone. Tips should only be part of your ideas generation and putting companies on your radar for the future.
How we're ramping up our stock picking. Fortunately, we're not starting from scratch. Between us, we have a couple of decades of investing experience. We'll be using Stockopedia extensively over the coming weeks and months to help us with our stock picking and see if we can find any winners. We've put a link in the description below to a recent video that we shot documenting the purchase of a single stock using this analysis method if you want to see Stockopedia in action.
Thanks for watching. On this channel, we're talking about personal finance, investing, and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.